Here, building some of the fundamentals of oil and natural gas prices. So, Brian, where do we want to start?
Well, listen, first, we're going to give people a chance to sign in. So watch our little intro.
That is so cool. I love that thing.
It's always fun. Well, listen, folks, thanks for showing up. If you're watching live, really appreciate you. Feel free to ask questions along the way. We will get to them later in the segment. We are going to go through this really, really quickly. And do let us know in the comments if you would like to see this built out into an extensive webinar, because we are going to touch things that could last over 3 days. We could go into this for 3 days and still not even scratch the surface. So
Right.
we're going to touch things from a very high level. We have several people and several customers that have requested really trying to understand how to look at fundamentals, how that impacts oil prices, how that impacts natural gas prices, and the energy market dynamics, because understanding how these price fluctuates and the geopolitical factors, the economic forces, all of this really, really matters. So, listen, thank you for showing up. Feel free to add comments. We will get to them live at the end. And if you stick around, we are going to cover 3 things that you can walk away with, that you're going to be more insight. You're going to have more insight into the energy market as it relates to energy prices. So we're going to cover the 5 most impactful metrics in projecting prices, the 3 critical pieces to see future supply and demand, and you're going to walk away with your game steps, what you should look at so that you can develop a strategy custom for your business or for yourself. So thank you for showing up. So today we're going to take you from a blank slate to a confident strategist. And what can you do with this? You could invest in energy assets. You could trade commodities like a pro. We are not financial advisors. There are disclaimers down below. We are going to offer this, but both Bill and myself, we have traded energy commodities and been on the buy side of the equation, the sell side of the equation, and you can apply this insight to different industries so that you can invest and make more money, so that you could trade and make more money, so that you could hedge and protect your assets, whether you're on the buy side or sell side, because many people look at the price and think, well, it went up today. Who knows why? Well, that is what we look at every single day. And you want to leverage your energy expertise into lucrative ways. And if you're in the energy industry, you can apply this. And I guarantee if you spend enough time on this topic, you will find a way to improve the asset performance, whether it be a pipeline, processing plant, a utility, a producer. I guarantee if you apply this insight and you study, you will add 10% to the bottom line. And if you're trading energy commodities, I guarantee you're going to be more educated on the topic and be able to avert risk and increase your rewards. Again, not financial advisors, but we are professional commodity traders. We have done that for companies in the course of our career, as well as for ourselves personally. You can also use this commodity expertise to invest and trade into different industries. For example, if you know a particular industry has a lot of data centers that are driven on power prices, and you're able to track what those power prices are and whether or not the commodities that is generating those power prices are increasing, you now have an edge on understanding the cost. Did I miss anything there, Bill?
Now, I think one of the things that we try to help you with is understanding all the different correlations out outside of the energy space. A lot of people just get siloed into the energy space and saying, "Well, I just want to know everything that's here." Well, that's just like saying, "I'm going to go down this road because it's pretty. I don't know where it goes to. I don't know where I'm coming from, but it's a pretty drive." Well, that's a good reason to go down any road, but it's not going to get you to the destination we're trying to do. So what we're trying to do is help you get to the destination that you want to do and help you learn how to basically make your experience in this personalized.
Right. Make your experience in this personalized, and you can use that within your company or for yourself. And I guarantee if you pay attention and you study and you focus, you will create value for yourself and for your company. So, why fundamentals? Why should you look at fundamentals? Well, Wayne Gretzky, fantastic hockey player, was once quoted as saying, I skate to where the puck is going to be, not where it has been. So, a trap that many people look at is they look at today's headlines, today's supply, today's demand, and today's storage. That's important, but it's important relative to history, where we've come from, and where we're going into the future. So you you shouldn't look at a headline or today's supply, demand, storage, and expect it to be the same tomorrow. I guarantee it will be different. And that's part of the reason the energy commodities, they fluctuate every single day. So there are lies, and pardon my language, there's lies, damn lies, and statistics. That's another quote that I like. Anyone can come up with a statistic that sounds compelling. I urge you to look deeper, evaluate the possibilities, always project into the future, and realize anytime you are projecting into the future, you are going to be wrong a large percentage of the time. Many of the
Hey,
largest
Brian,
trade, yo,
did you know that 95% of all statistics are made up on the spot and are wrong?
you know what? I I've heard that when it comes to the energy business, I've heard that 95% of understanding the energy prices is statistics and the other half is mental. So
That's right.
that's what I've heard.
Exactly.
The other half is mental. So thank you, Yogi Berra. Um, so the trajectory of supply, trajectory of storage, trajectory of demand, don't just look at where they are, but those are the three critical components. And what is supply? That is the production that comes out. That is how the generation happens. The demand is the consumption, whether it be on the natural gas side or the electricity side or the storage side of the equation. So, who are these two guys? Well, my name is Brian. This is my business partner, Bill, and we'd like to say thank you, welcome. And we're going to spend 2 minutes and talk about Energy Rogue. We founded Energy Rogue in 2021 as a comprehensive, ultimate energy resource with comprehensive data, insights, and we provide in depth analysis on the energy markets. And before, you may have spent countless hours or tens of thousands of dollars chasing down insights on the energy business. With energyrogue.com, you now have that in one place at an affordable price. We have a global reach. We're in 5 different continents, 32 of 50 states. We have grown so much in the last 3 years. And if you're a member and you're watching this, thank you. Really appreciate
Absolutely.
you. Really appreciate you. And if you're not a member, there is information down below. You can also email us at rogue@energyrogue.com. Be happy to talk to you and introduce you to our platform. But our flagship product is Rogue Edge, and that it gives you access to 150 interactive charts, weekly PDFs, and a weekly video that gives you insights into the energy market at just $89 a month. If you spend an hour a month looking for information on energy markets, you're probably wasting time or money. It's probably going to be more cost effective to subscribe with us. For those that want a little bit more of a tailored approach, we recently launched Rogue Premium at $179 a month. That includes everything inside of Rogue Edge. Plus, we are going to give you a personalized plan on our introductory call, and we will have check-ins with you to keep you on track, whether you have an investment strategy, an energy asset strategy, a trading strategy. We will help you on your mission. It is only $179 a month. Plus, you get access to our Discord channel, which is active with people from all parts of the globe. They are in different continents, different angles. We have hedge funds, we have producers, midstreamers, consumers. We have so many representations in there that you're going to get a holistic view, and we're all here to help each other. So, when you're looking at fundamentals, crude oil fundamentals, I am going to go through this relatively quickly. Feel free to ask questions. And if you want to see this in a more extensive platform, let us know in the comments. Be sure to like and subscribe. So when you look at when you look at crude oil, it comes back to the three things that we mentioned: supply, demand, storage. In crude's case, it's called stocks. But on the crude oil supply trends, you should look at historical production levels, decline rates. What are the base decline rates? What are the new supply addition? What is the significance of rig counts? Now, when you look at this, and that's part of the reason that we established Rogue Edge, and well, we were talking about crude oil, so I am just with a few clicks of the button, we are going to take a look at the supply side of the equation. You can view this from a lot of different angles, and what we typically do is you can start by taking a look at the base production and see the production go up. We take a look at the base decline, and all of these charts are within Rogue Edge. If you have an interest, there's information down below. You can see when a well comes on, it will decline over time. And the base decline right now in the shale region is over 650,000 barrels a day every single month, which means it puts so much pressure on new production. We are bringing on new production in March, in March of over 655,000 barrels a day, which means we are essentially treading water, which means if you see rigs drop, we may see declines start to impact. So understanding the historical production levels, the decline rates, new supply additions, significance of rig counts, all of this matters so that you can see what is happening on those trends. On the demand side of the equation, where are we on historical demand patterns? Seasonality, are we in driving season? Is there something happening overseas? What's happening on exports? What are driving some of the demand changes? You know, are Tesla's going to impact this year's demand? These are the questions you need to evaluate so that you can come up with a good strategy. And then look at interpreting storage volumes relative to historical norms, the impact of interest rates and storage economics. Then on the natural gas side, look at production trends, leading indicators such as rig count, leading indicators such as what time of the year, because in the winter months there could be freeze offs, there could be things impacting the supply side, or infrastructure on the supply side. Then look at decline rates and new supply the same way that we did with crude oil. On the natural gas demand side, look at seasonal patterns. Are we entering a shoulder month? Are we entering a peak demand month? And again, I'm going to, with a few clicks, you will hop over to the demand side of the equation, and you will see seasonality built into this. And of course, with our interactive charts, you can take a look at just basic residential, commercial, electric, and industrial and see what the seasonality looks like. For example, you'll see the green is kind of spiking up during the winter months, but the red during the summer months. That's because the green is the residential commercial, which is driven on furnace or natural gas heat, and
Heat demand, yes.
the red is driven on AC load. So
Right.
what you can see over time is we've continually increased every single year, and now depending on weather, you can have peaks. So those are the peaks. Now just notice something. 2016, which was a soft demand year, 2017 was a pretty strong demand year. So I wonder, we had a soft demand year this year. I wonder if we're going to be coming back to that. So on the natural gas storage side, you got to look at where are we at in terms of history, terms of the 5-year average, the 3-year average, the 10-year average. Where are we, and what are the storage economics? For example, right now the prompt month is trading in the $1.60 range, but in December we're trading $3.25. So as long as there's not physical constraints, is it worth it from an interest rate perspective to finance holding the molecule from May to December? And the answer is yes. So these are the things that you need to look at or should evaluate on the fundamental side. So supply, demand, storage, and there's
And on
multiple factors on each one of those.
That's right. And storage, the other thing is how, when is it coming out? When can it come? When can it possibly come out? And what rate it can come out? So it's important as you look at storage to know just what years, what months you're going in, what months you're coming out, and that will help you begin to develop that overall picture.
Yes. And again, drop us a comment if you want to learn a little bit more about this, because we can make this kind of a longer form tutorial for you, because we are going relatively fast today because we have a lot of material to cover when you're trying to decode fundamentals for oil and gas prices. Now, you shouldn't ignore technicals. Technicals are very key and very critical. And when you get on the technical side of the equation, there are literally hundreds of technical indicators and thousands of different combinations. We're not going to cover those, but some key ones that you should evaluate and take a look at are moving averages, RSI, Bollinger Band, candlestick patterns, so that you can get a holistic market view, have informed decisions, and have strategic trading. So again, drop us a like, drop us a comment. Let us know. We will take your questions towards the end. Now, where do you find all this? Because we just covered crude oil fundamentals, where you cover supply trends with historical production, decline rates, new supply additions, significance of rig counts, demand, seasonality, key factors driving demand changes, interpreting storage volumes, interest rates on the natural gas supply, what are decline rates, new supply, leading indicators such as rigs, seasonal patterns, primary demand sectors, historical context, and then take a look at the technical side of the equation, the key technicals, moving averages, RSI, Bollinger Band, candlesticks. Those are just a few. There's literally hundreds of those. So where can you find all these resources?
You
So
just covered my entire career, brother.
what's that?
You just uncovered my entire career.
How so? What'd I do?
Everything you just listed before. It took a whole career to get all that.
Yeah, well, it takes a long time to really understand it from the energy side of the equation. And stay tuned, because we do have a natural gas basics course that is coming out with a partner, Reese Energy Consulting. So
Gosh,
stay tuned.
Brian, it would have been really good when I started the energy business if I would have had some place to go to get all this information.
Yeah, yes. Well, you can look at places like the Federal Reserve, state level oil and gas commissions or services. They're called different in different states. And then you can look at EIA OPEC, IEA. These have good fundamental things in there, but you have to pick it apart. You have to look at it. The way OPEC serves it up is a little bit different than EIA. The way the Railroad Commission in Texas is a little bit different than the Corporation Commission in Oklahoma. All of these are going to be a little bit different. So on the fundamental side, I would look for resources at the Federal Reserve, EIA, OPEC, state level oil and gas commissions. So the data is out there. You have to pick through and find it. Then if you want to look at the technical side, personally, I use TradingView and I use Bar Chart. Those two are phenomenal resources. There are other resources out there. I've listed a couple. But what's the key? You're looking at the fundamentals. You're looking at the technicals. That's so you can take this data, translate this data into information, put it into strategy, and put it into action. And what can you do with this? With this plan, you can invest in upstream, midstream, downstream. You can look at the trading or hedging side for your business on futures, options, energy equities. We are not financial advisors. We are commodity traders. The disclaimer's down below. You could buy or sell oil, natural gas, electricity. You could focus on asset management, how to operate pipelines better, how to optimize the economic performance of those pipelines, the processing, refining, power plants. All of these are impacted by energy prices, and all of these are impacted by oil, natural gas prices. You can also come to our service, which is only $89 a month for Rogue Edge. Rogue Premium, again, we will spend time with you on our kickoff call and identify a key strategy resource for you, your business, and your goals in that. And that package is only $179 a month. And with that package, you can meet with us, ask us questions. Plus, it gives access to our community Discord where we cover things in the business every single day because today's headlines are not going to be applicable tomorrow. And it changes every day. Now, if you or your organization needs a little bit more of goal driven, we do have Rogue Advantage. That is a custom plan. We do anything from board level strategy insights to tasks for your business that are on the energy side of the equation, such as finding markets, finding midstream, finding capital, finding operating teams. These are some of the things on Rogue Advantage that is a much more partnership driven level. So you do have to apply to become a member of Rogue Advantage. We would love to talk to you. There's information down below. Did I miss anything before we move on, Bill? You're on mute.
It's important to realize that the part of this is being able to give you the ability to come up with your own plans and your own decisions. And that's why we start off with just, we just want people to know that we're more than just data. We try to bring you and make it specific to whatever situation you're in, whether it's privately or with a company, and help you become that success that you need to become.
Right. So listen, we would love to see you, but again, there are resources out there, such as I identified the Federal Reserve, state level organizations, EIA, OPEC. But I've done this, and it's part of the reason we created Energy Rogue. You are going to spend probably 10 to 20 hours a week to really understand things that we just covered in a few clicks of the mouse. So why choose us? We offer in-depth analysis. We go beyond the statistics. We do post our opinion, even though we're not financial advisors, and we try and give you the tools and tactics for informed decision makings so you can make cost-effective and solutions focused decisions and have short-term opportunities, long-term positioning so that you could stay ahead and leverage our weekly videos and PDFs to stay ahead of the volatile energy markets. So in conclusion, skate to where the puck is going. What is the key to success? Where are we going? Not where we've been. Where we've been is important, but you got to look at it in relative to where we are today and where we're going tomorrow. 3 aspects: supply, demand, storage. Those are the 3 levels. Skate to where the puck is going to be, not where it has been. So, monitor supply dynamics. Unlock the secrets of energy demand on natural gas. You got to look at things like seasonal patterns, storage, weather. Oil, look at US dollar, interest rates, equity markets. You got to look at exports on LNG, crude, and refined products because all of that matters. Cracking the code, the secrets of energy storage, unlocking the balance of the market. The key to understanding storage and inventory levels: if you have high storage, what does that mean? Is supply too high? Is demand too low? Exploring economic factors. Are there other factors at play? So there's a lot of different angles. Now, here's what I recommended that you stick around for. Here's the 5 most impactful metrics in projecting prices. You should look at the decline rates of what the commodity prices are. For example, on the natural gas supply side of the equation, you got to let it load up. Do me a favor and do not just look at one variable and say, oh, production is dropping, so it's going to continue. You need to look at what the decline rate is, where those declines are happening, what basin they are happening in. At 100 BCF a day, we're declining over 3.4 BCF every single day. And then what new production trends? This is just raw new production. And where is that leaving us? Are we rising or falling? In the past 6 months, we've been set up for a declining resource. And so look at the decline, then you look at new production, then you look at where the rigs are going, which is going to tell you where we're going to be in 3 to 12 months. Storage, that's important to look at. Where are we relative to history? What the broader market is for the macroeconomic influences. So, what are the 3 critical pieces to see future supply and demand? Supply side fundamentals, look at production trends, decline rates, new supply additions. On the demand side, historical demand patterns, key drivers of consumption. Are they rising? Are they falling? Where are we on the seasonal side of the demand fluctuations, such as for oil, it may be on the refined products going into driving season. For natural gas, it may be going into winter. What are the economic or geopolitical factors that are impacting the commodity? You could see that in conflicts and wars that we've had in Gaza, Ukraine, how that's impacted commodity prices. Storage levels. What is the volume of inventory held in storage? Interpreting that, looking at the market balance indications. And any comments on that before I move on, Bill?
No, I think a lot of the thing is understanding supply demand is not as simple as 1 plus 1 equals 2. What you find out is supply and demand is 2 plus 2 equals 27. So you have to be able to understand where all this stuff is coming from and what on any particular day is the driving factor out of all this stuff we just went through. It's not a if it was simple, everybody would be doing it.
Yes, it's a complicated process. Now, what do you do to implement this approach? You should evaluate technicals to look at your short-term direction. Fundamentals, that'll give you the medium to long-term direction. Then put this into a full picture where you combine the technicals and fundamentals. And then you look at news, sentiment, rumors to see what might be happening. For example, natural gas spent most of yesterday trading at $1.68, then spiked up to $1.80, then came back down to $1.66. Now, why is the question? And we covered that in our Discord community. So these are the things that are important to understand, so that if you are investing in energy, if you're trading in energy, you need to look at the technicals, you need to look at the fundamentals and put those into place. And then you should help and get input from various places, various resources, because one opinion is not ruling. Our opinion is just our opinion. We have contrarian opinions from time to time. Our Discord community really thrives on having so many different opinions, and putting all that together really helps shape the business and part of the organization. So Bill, once you talk a little bit about that, because I'm going to pull up something that I just created yesterday. I'm going to come up with a better version of this, but this will put this into focus so that people can take something away and really
So
do something with it.
the one thing I was talking about is nuances, because if you are looking at the total market, that's one thing, but if you look in the specific areas, that's what we tried to do with the information that we provide you, is get you the ability to say, oh, I really wanted to see what's going on in the Bakken, or I want to see what's going on in the Permian, or I want to go see. We can help you get to that point. And there's always something weird going on. I promise you, there's always something weird geopolitically, fundamentally, operationally. There's always something weird about to happen. It's sort of like if I told you, Brian, right now, hey, listen, let's invest in buggy whip manufacturers. You go, why would we do that? And I says, well, what if I told you tomorrow all combustion engines would go away? And you go, oh, well, maybe we got to invest in buggy whip manufacturers. Because, so it's those are kind of the nuances, and those are kind of the type of stuff that Brian and I look for to help you navigate this market. So what do you got there, Brian?
So I was trying to make this the same color, and I'm going to automate this at some point, and this is going to show up on Rogue Premium. So when I think about how to approach the market, many people start, and I often start in the same place. What is the price doing today? For example, we're right at this level. I paint levels on my charts. You can see crude just fell off the table here, went to $83. There's probably some news happening right now. Some of the news and rumors will have to catch up after our live stream. So I take a look at what the technicals are doing. Then I look at the supply over the last 7 days, which has been declining, which is a bullish indication. Where are we on supply versus last year? We're actually, I looked at this yesterday, Bill. Right now, we are below last year's production at this point in time.
Yeah,
Can you believe that?
and it has, and part of that is intentional, and part of that is lack of rigs, like we talked about.
Yep. And then you look at supply versus the last 5 years, we're modestly bearish. Then you look at storage, we are full on bearish there. Again, not financial advisors. It's not a recommendation to buy or sell any commodity. We are only sharing our opinion here as perspective for the market. And so we look at the storage for 7 days versus last year versus 5 years. Demand, where we over the last 7 days versus last year versus the last 5 years. What is the supply outlook? The trajectory of the fundamentals, giving the long-term indication, the trajectory of storage. That gives you an overall sentiment where you have supply outlook bullish, demand outlook bullish. My thesis on natural gas, I just did this yesterday. My opinion may change today or any day. Again, not financial advisors. I am modestly bullish from here. There is a technical reason, even though that we're down, that I am staring at a different price level. But when I put this all together, look at the technicals, look at the fundamentals, these are the correlations that I see as most valuable. You may have different correlations that are more valuable to you. But the key is put it in a format that is repeatable so that you can update your technicals, update your fundamentals so that you can come up with your decisions so that you can manage your business, whether you are in the energy business, a hedge fund, private equity business, and you're making investments in energy, or individual traders or macro traders. We have so many different people that have come to our platform. We would love to hear from you. Let us know if you like this kind of content, if you want to see more of this type of content. We would love to hear a little bit more about it. So let's see. I'm going to get to the comments now. Richard, great seeing you. Thank you for always showing up. Really, really appreciate you showing up every week. So let's see. And then this was us. And
Yeah.
then, hey, James, listen, I started listening to your live cast this morning. I hope you're doing good. I hope South Africa is treating you great. So thanks so much for showing up. And I did touch on technicals. For anybody that really wants to understand a little bit more about technicals, Arcus FX, James can help you. And just do a Google search on Arcus FX. I don't have the website that is there, but he is a fantastic technical analysis person, and he has specific targets. And we kind of focus and cater on the fundamental side of the equation. We do touch on the technicals, but James and his service goes so much deeper.
An
So
all-around good guy.
all around good guy. Parker, great seeing you. Let's see.
Yeah, he's bringing up ducks. I think that was interesting. We didn't really hit much on ducks in this presentation, but it is still part of the fundamentals.
This
If you
is
don't know what a duck
actually,
is, it's drilled and uncompleted, right? So they
yes,
drilled the well, they haven't completed it. So all they have to do is, without sending a rig out, basically, they do have to send a type of rig out, but without sending a drilling rig out, they can go out and complete a well and bring it on. So it brings on production and it can have an impact on the rigs as a leading indicator. So that's something that that's one of the many nuances that we had talked about.
yep. And so, Parker, thanks for showing up. And since I'm going to call you out, since you are a member, thank you for being with us. If you just go to the dashboard, select rigs, and go to the trends and ducks, and you got to scroll down a bit, but you'll start by taking a look at the total shale rigs. Then you'll look at each region on the rig count, and that'll tell you where we are on the 5-year curve and where we are sitting on that. And then here's the shale region ducks. I'm going to take off this 5-year band because we've been on the 5-year lows for some time. So I want to walk you through this. So back in 2014, 15, 16, this was when crude oil prices dropped and commodity prices dropped as a whole. And so we had a rise in ducks. Then we dropped in ducks as the commodity prices recovered. Then we slowly started increasing. And most of this had to do with infrastructure. And it rose and rose and rose until 2020. My gosh, what happened in 2020? Didn't something happen in 2020, Bill? There was
Oh,
something
gee.
significant, I think, in 2020. Um, yeah,
I know that it was a really bad movie year. That's all for sure.
no. So during COVID, we had an increase in ducks, and then those were completed over the next 18 months. And over the next 18 months into 2022, we kind of extinguished our inventory of ducks. And then we rose a bit in 2022, which is kind of surprising, or into 23, kind of surprising because commodity prices were still a little bit higher.
Yeah,
We've
but we had some infrastructure
decreased.
problems at that time.
We've decreased, and Parker was asking specifically on the Permian. So let's take a
Right.
look at the Permian. Let's scroll down to the Permian right here. So here's what the latest number is March. These come out, the ducks come out once a month. And what you can see is we've kind of flatlined our ducks. And most of the ducks were brought online. I'd probably say most of the ducks, there's not a significant increase or decrease that I'm really seeing here. And it's kind of flatlined since
Now
last
remember, he's
October.
backing up 18 months. He's talking about 18 months.
So back to, help me do the math to here, maybe.
So that would basically go back to the first of 23 or 24, excuse me. No, first of 23.
The 1st of 23. Okay.
January 23.
So here we go. We've actually went from 960 down to 880 in the Permian. So now I will say this data comes from the EIA through the Drilling Productivity Report. There could be different state numbers that are different than this number. So that's important to explore there, Parker. I'm not seeing the 500 wells. Let's actually take a
Well,
look
see, it
at,
went up and down, Brian. Go back down and see if you'll see it went up and down.
you mean right there?
So yeah, right there. See how we went up, then we came back down, then went right back up, and then we started to come back
So
down.
that
So
might be so maybe it
it's
was
how they're reflecting the numbers.
okay. So there's a little bit of balance, but
Because what we show is net, we don't show total.
yeah, Parker, we can dive in a little bit deeper because I want to make sure that we get a complete answer on this. But these decks have definitely contributed. I would say this: when you look at the not just Permian, but when you look at this pipeline of completions, this is from 8,800, call it 8,900 wells down to 5,200. So over 3,600 wells were completed, and they are definitely part of the supply mix. So your base point supply is going to be in a crunch, and that's part of what we're seeing in the when we look at the supply dynamics on that side of the equation. So when we're looking at, I'm just going to pick on natural gas just because it's top of mind here. But when we look at this right here, we've basically been struggling for a while. And you can
Right.
see a similar curve on this. And this is the zero line. Let me draw on this real quick because
But
Bill loves
specifically
it.
in the Permian, most of the gas that's coming on is oil, it's associated gas. And so you have to follow the oil rigs as well as the gas rigs to see that. And some of our data breaks that down into the various commodities, what are just 100% gas rigs and what are oil and gas rigs.
So back in 2022, we were increasing every single month anywhere from 200,000 a day up to BCF a day each month. So each month we were adding our net supply a BCF a day during the middle of 2022. But since middle part of 2023, we've been treading water. So so Parker, you're spot on the thesis. So, thank you for that. And let's see. Hi there. We got I like that avatar. I don't know what that avatar is, but I like it. Apart from lies and statistics, I haven't engaged with you yet, but I already like you. There's also politics. Is there political pressure in the U.S.
Didn't politics fall under that first one?
Yeah. Well, apart from lies and statistics, I mean, it's all embedded. It's a triangle. Um, is there political pressure in the U.S. on the export hubs not to export LNG so that prices in the U.S. are lower until the elections? Okay. We're not financial advisors. We are not political analysts. And what I'm going to say is my opinion and my opinion only. Yes. The answer is yes, 100%. There are going to be moves that are made between now and the US election, which happens in November, that will try and keep any prices lower on natural gas, power, and crude oil / gasoline, because that is going to impact the voters. And you will see moves that will happen in support of that. I will say any facility that is currently able to export LNG is not subject to any political restriction from exporting the LNG. So it is a
Today.
commercial operation right
That's
now. So
that's today.
that's today. It could change in the future, but today, and the reason I'm picking that apart is many people picked apart Biden's pause on LNG export terminals, and that pause is for future building, not existing permitted or
It's actually,
commercial
yeah,
operations.
it's for future permits, not even building. We still
Which
have some
means
future building.
anything that is planned on coming online in the next 36 months, it's irrelevant. It's coming.
Well,
Um,
it's irrelevant right now. It's going to be more economic than it is going to be regulatory.
right. These are going to be commercially driven, not political driven decisions on the exports over from now to 36 months, which is well past the election. So the
Well,
pause on LNG exports is really on future permits, which is in early 2030s.
it's a shout out to one of his bases. So
So
you just got to always remember this, Brian, that uh, if uh, if we wanted to do stuff like this, we have to
This
get a
was a
lot more.
conspiracy. They'd have to get all those people to lie.
yes, they would. So listen, Richard, thanks for tuning in. James, great seeing you. I hope you stuck around because it took us a while to get there. Parker, I hope I answered your question or at least got somewhat close. If not, hit me up offline. I'll get back to you. And listen, this is the first time I've seen you, so thank you for tuning in. Thank you for
Thanks,
showing up
Lucas.
and asking the question because I think that's so critical. So, oh, James is here. Okay. So, hey, James, if you put your website in the comments, I'll post it up here. So, again, for anybody looking for a little bit more on the technical side of the equation, we touch on it in our service, but we don't go deep. James and his service at Arcus FX has an amazing service, and I'm a member on one of their levels, and I really appreciate their guidance because Arcus FX really has kind of points you in the right direction there.
That's
So
right. And James won the Smartens.
yeah, and listen, I really appreciate everybody listening in. If you found value, like, and if you didn't find something or it's not hitting the mark, drop something in the comment. Would love to hear from you. And let's see, and we got oh, yes, we definitely will. That is a good one. That is well done. And for those that aren't following, is James was starting to short. I can't remember if it was right around here, but it was right around this 85 level because we kind of stalled out there and went straight down to this $83 level. So congratulations. That was a great short. And listen, again, really appreciate you coming and supporting us. It means a lot. And I think that's all I have for today. If you like this, would love to see you in our service. There's information down below. If not, hopefully we help to provide a little bit of a base so that you can become a little bit smarter on how you approach the energy markets. So, Bill, any closing thoughts?
No, I just think that you just saw the very tip of the iceberg. There's a lot more to this, and we'd like to spend time with you, helping you explore it and understand it and make money with it.
Yep. And if you're interested in a course, we're actually building out a course that is going to be on this topic. If you're interested in it, let us know down below because it will help us prioritize. So thanks so much. Thanks for joining us. I'm so glad that you spent 48 minutes that we intended to do in 30. So thanks for showing up. Really look forward to seeing you. We will see you again next week. Any closing thoughts, Bill?
Just, hey, Lucas, appreciate you commenting. That's what we live for.
Yep. So thanks so much, and we will see you next week, folks.